Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw losses for the major indexes and not a great close, Ken.
No, some selling late in the day again, but let's take a look at three stocks. Molina Healthcare, today's stock of the day, right on the homepage of investors.com. Also take a look at CF Industries, which is showing some accumulation. It's run up above its 50-day moving average. That one's looking pretty good. And also lithium producer ALB, a name that we've discussed off and on the show, but still like how it's holding support here.
All right, we will analyze those three charts, but first let's take a look at the major indexes today, with the Nasdaq closing down 1% and a significant decline, putting the index at bear market lows, undercutting the June lows intraday, so its lowest level in 2 years, Ken. We also had the Dow down about 0.3%, same for the Russell 2000, but the S&P 500 also hit pretty hard, down 0.75% today.
Yeah, it was sort of an up and down roller coaster session again. Jamie Dimon, the CEO of JP Morgan, was on CNBC earlier today saying that he thinks the market could see 20% more downside, which seems excessive, but that's what he said. And then you had Fed Vice Chair Lael Brainerd, who was talking about interest rate hikes, and people interpreted her comments to be a bit dovish, and so we rallied sharply off lows. But then, sellers come in late in the day. Most of the selling in the Nasdaq concentrated in a lot of your chip names like Lam Research, Qualcomm, Broadcom, KLA. So you have basically the Biden administration. They're tightening restrictions on chip exports to China. This has been a story for going on for a little while, but most of the selling concentrated in the chip stocks today on the Nasdaq.
Yeah, that's right. So we definitely have an undercut here for S&H, but back to the NASDAQ. That prior low was 10,565. The NASDAQ closing today at 10,542. So once again, putting that tech-heavy index at its lowest levels in couple of years, Ken, if you can believe it. We did also undercut, or let's see, we got close, I believe. Okay, so that's maybe the next stop to undercutting those late September 2020 lows, right around 10,519. So we're not too far away from that. And then I guess the round number at 10,000 would be the next level on the downside to
exactly.
See if we get down to that.
Yeah, so 10,000 does seem to be a likely stopping point here. We may or may not get there, but this is listen, the market's been in a correction for quite some time. The Nasdaq Composite was the last holdout. Just about all the other indexes had taken out those June lows. So right now we're in the middle of this third leg down. We made one leg down, rallied back, made a second leg down. Rallied back, and now this is sort of the early stages of the third leg down. And the question is, are we going to see one last shakeout here? Because one thing we know for sure, there's a lot of sellers that have been shaken out of this market already. There could be more to go, but that is actually, good news for the bulls, because you want to see a good shakeout of sellers. Maybe we'll get that in this third leg down. But I wanted to look at the VIX today too, because it was looking like a pretty fearful market. We're always interested in seeing what fear looks like at market bottoms, but you can see the VIX is still having a hard time getting out of its own way here. It popped early, getting closer to that 35 level, but then it faded, and it might have closed off lows a little bit, but still had a hard time holding its gain today.
But I mean, if we do see another similar day tomorrow or in the coming days intraday like this, we very well could get a pop above that 35 level. For those who aren't used to looking at the VIX, what would that indicate, and why is it significant around a market bottom?
Well, at market bottoms, one thing we know, decade after decade, is that you see capitulation. People throw their arms up in despair and say, I can't take it anymore. So you tend to get a lot of fear at market bottoms. And so watching the VIX here is really just a fear indicator. When you really start to see it spike, it's just telling us that investors are fearful. So when you have a spiking VIX and then then you've got, the put call ratio that we look at as well. So if a lot of people are buying puts, that could be a contrarian indicator. So, we want to see capitulation here. I think the general consensus is that we haven't seen it yet. If we do get a sharp undercut of this third leg down that we're currently in, that could be the capitulation that we need. But we'll be still watching this put call volume ratio as well as the VIX to help us get a gauge on excessive fearfulness in the market.
Yeah. So large amounts of cash continues to be a pretty good strategy in this market, Ken.
No doubt. That's we've been kind of pounding the table on IBD Live every morning. It's even coming up with stocks on the stock market today video. When you're in a good bull market, there's no shortage of stocks that are looking good. Lately, it's just been getting more and more difficult. So. The good news is that we will bottom at some point, and we'll get that explosive follow through day, and we'll get a lot of stocks participating, but we're just not quite there yet.
Yeah, but for now, keeping the vast majority of our powder dry and ready to strike when we do get those more favorable conditions. Let's take a look at today's stock of the day, which is Molina Healthcare, ticker MOH. We have an RS line blue dot underscoring the stock's outperformance versus the S&P 500 here, Ken, up about 0.6% today and right around a round number of significance at 350.
Yeah. This is a very good setup here. I particularly like the stock's action on Friday. It was a very bad day for the market on Friday, but look at what Molina did. It went down and then it closed all the way up near its high, and we had a weak market again today, selling picking up the pace late in the session, but Molina was able to close higher and end near its session high. So I think there's a lot to like about the setup here. You can see this this is double bottom base that you're highlighting here. You can see that sharp pullback actually undercut the low of a prior consolidation right in that area there. So this is an example how a stock resets the base count. So this would be if it can eventually break out of this structure, it would be a first stage move, which says that there could be some good gains here. So I think Molina is a good one for the watch list. Good technicals, good composite rating, good fundamentals. It's all there.
Right. I guess one thing to be aware of is that we do have earnings coming up in 2 weeks. So with Molina being a stock that really likes to cling to its 10-week line, if not go further down to reset the base structure, touching the 40-week line, are traders who want to take a nibble going to be able to get enough cushion to hold into the earnings report in the next couple of weeks? Or do you think it's best to just keep this one on the watch list, see if the market can get back on its feet, and then see if earnings can be that next catalyst?
Yeah, in this back and forth market that we're currently in, I don't know that 2 weeks is going to be enough to build up a 5 or 10% profit if you were to buy the stock right now. So I'd be in the camp of just waiting until earnings. We should note that United Health, UNH, which is a group companion of Molina, they report Friday. So a lot of managed care firms could be moving on Friday, depending on what United Health has to say. So we'll see how Molina acts after United Health reports earnings.
Yeah, UNH also one to watch here. Let's take a look at CF Industries, which has been rallying off of its lows, up 1.7% today. Doesn't look like we got some above average volume behind the move, but a lot of agriculture and commodity related names and areas like wheat and corn really on the move today as Russia-Ukraine tensions are back in the headlines in a big way.
Yeah, apparently Russia, which obviously has not been doing well in this war with Ukraine. Ukraine has been making a very solid stand, but apparently Russia had been doing some serious some bombing today outside of Kiev. So CF Industries, what I like about this chart is that when it hit that low around 90 and started rallying, it did so in heavy volume. So we're hardly seeing any of that. But this, to me, still looks like it's a stock that's under accumulation here, and you're highlighting those up days in heavy volume as it rallied off lows. So this is a classic one for the watch list. I like how it's holding above the 50-day moving average. Volume was light today, but that comes on the heels of, like I said, several above average volume price gains. So we'll see if this is going to be a base that just forms right next to this prior consolidation. It's shaping up well so far, but just going to be patient and watch how it sets up here. But I think CF Industries still has a chance to be a leader.
Yeah, and we have a relative strength line blue dot on the weekly chart here, so that's also something to note. Looks like earnings are likely to come out in early November, so we have a couple of weeks before that. Let's round things out with a look at Albemarle, a lithium play, up 2% today and continuing to find support at its 50-day line.
Yeah, I mean, it doesn't look exactly like CF Industries, but it is. Volume has quieted down in this name quite a bit, but I do like how it is holding support here. You could have an early entry if this were to, make further progress from the 50-day and maybe break out over these highs from last week. But I like the technical setup here. It's got a relative strength line that's pretty close to new high ground, and this is a major lithium producer. So you've got the good fundamentals, big acceleration in revenue growth in recent quarters, and just a nice technical setup here. So rather than buy it off the 10-week moving average with market risk still elevated, I would just kind of wait and see if this can form a base. It looks like it's 4 weeks into a new consolidation here, and maybe it'll just form a little cut base. And if the market improves, this is another one that could rise nicely with the market.
That's exactly right. All right. Well, thank you, Ken. And thanks everyone for tuning in. The team will be back tomorrow morning on IBD Live. We hope you join us, investors.com/IBD Live, for all the details on our daily morning live stream, where we are breaking down our thoughts on current market conditions, portfolio management strategies, stocks for your watch list, and so much more. So we'll see you in the morning, and we'll also see you right back here tomorrow after the close.